Happy Sat Stack and Saturday. Welcome everyone to the #1 daily Bitcoin pod. In today's show, a new hyper-Bitcoinization scenario suggests the Bitcoin price reaching 1.5 million by 2028. I'll break down the scenario for you here in today's show. Also, I got another prediction of 180,000 according to this model this year, as well as Trump's national cyber strategy pledges to support crypto and blockchain. Also, the latest, Pakistan's parliament passes the Virtual Asset Act of 2026 and what this means. The latest from Arthur Hayes, markets under price and risk of longer Middle East war and how this is to impact the crypto market, as well as Bitcoin outshining gold throughout 2029. We'll also discuss strategy STRC, stock trading surge, how much Bitcoin realistically can Saylor buy? We'll also be taking a look at the overall crypto market, all this plus so much more right here in today's show. Let's dive right into our feature story of the day. This is actually something I asked ChatGPT to model the Bitcoin price scenarios for 2028 to 2040. And then we're going to go on a deep dive specifically in the hyper-Bitcoinization case, which is the most bullish scenario, because we're going to go deeper. But let's start here with some context. Here's what it generated across conservative, base, and hyper-Bitcoinization cases. The conservative case I'll hit you with first. Slow adoption, heavy regulation, no major sovereign acceleration. 2028 prediction is between 250 and 400,000 per coin. 2032, and I used 4-year intervals because the year of the halvings. 2032, 600 to 900,000. 2036, 1.2 to 2 million. And by the year 2040, 3 to 5 million. And again, this is the conservative case, assuming Bitcoin grows more like digital 2.0, steady, but not explosive. Next up for the base case, ETFs expand globally, sovereigns quietly accumulate, and corporate treasuries grow. This prediction for 2028 ranges between 500 and 800,000. 2032, 1.5 to 2.5 million. 2036, 3 to 6 million. And by the year 2040, we're talking $8 to $15 million Bitcoin price action. This assumes Bitcoin becomes a recognized macro reserve asset by the mid 2030s and practically continues to grow at a pace it's already growing, hence the base case. But the most exciting is the hyper-Bitcoinization case, where multiple nation states adopt reserves, major currency crisis, capital flight event. This has us at between 800,000 and 1.5 million within the next couple of years at the time of the next halving in 2028. This would be pure fire, of course. 2032, 3 to 5 million. 2036, 8 to 15 million. Here's where it gets pretty exciting. By 2040, bro, $20 to $40 million Bitcoin. This scenario assumes rapid sovereign FOMO and global monetary instability. So I wanted to expand on this. So 4 hours ago, I asked ChatGPT to expand on the hyper-Bitcoinization case. And here's the breakdown. This scenario assumes Bitcoin stops being viewed as a speculative asset and begins functioning as a global reserve asset, competing with sovereign currencies. The key trigger is the nation-state adoption. Once a few countries begin stacking Bitcoin as a strategic reserve, the incentives change for everybody else. No country wants to be the last one accumulating. Why this matters for the supply, we all know there can only ever be 21 million Bitcoin, finite limited supply. Now imagine just 10 countries all trying to accumulate 100,000 Bitcoin each. That alone removes 1 million Bitcoin from that 21 million circulation, nearly 5% of the entire supply. And that's before the corporations, the Michael Saylors, the BlackRocks, the ETFs, and sovereign wealth funds compete for the rest. A great example of supply shock. Then comes the institutional FOMO. Once the governments begin accumulating the Bitcoin, institutions will follow. Many funds cannot allocate to Bitcoin until regulatory clarity exists, sovereign adoption begins, and the macro reserve narratives begin to form. Once those barriers break, capital flows can accelerate very quickly. We've already seen this early phase with the spot Bitcoin ETFs, which went live back in early 2024, as well as the corporate treasury strategies, which were all birthed with MicroStrategy back in 2020. Shout out Saylor. So hyper-Bitcoinization simply assumes this trend goes global. The macro catalyst is the currency instability, which we all know is a given as they continue to print fiat until the wheels fall off. This model also assumes a currency or sovereign debt crisis triggers capital flight. Historically, when the fiat systems wobble, the capital moves into neutral assets, and for centuries, that asset has been gold. But Bitcoin now offers something different and superior: fixed supply, globally transferable, censorship resistant, and digital settlement. And let's not forget, unconfiscatable. Unlike gold. We all can't forget about that Gold Seizure Act of 1933 now. The combination has never existed before, hence why Bitcoin's perfect money. Capital moves faster than ever now. Digital. And in the past, monetary transitions took decades. Today, capital can move in seconds, across borders, in seconds, permissionless. If global capital begins rotating into Bitcoin networks, repricing could happen far faster than most models assume. It could happen in a violent upheaval, quoting Samson Mao. This is where the $800,000 or $1.5 million Bitcoin within the next couple of years, 2028 having around the corner scenario, emerges. The final phase is the sovereign FOMO, or as Max Kaiser coined, the global hash war. Once early adopter nations benefit from accumulating the Bitcoin reserves, the rest will rush to follow, like what we're witnessing in El Salvador. First movers advantage. Other countries now, like the US, following. But hopefully we do something with this digital reserve that we have. But anyways, just like central banks once competed to accumulate gold reserves, except this time supply is capped, settlement is digital, and competition is global. At that point, Bitcoin stops being speculative and becomes a strategic geopolitical asset. That is the core assumption behind this hyper-Bitcoinization model. So if sovereign competition for Bitcoin reserves begins, the repricing could happen much faster than people really expect. And the window to accumulate beforehand may be far smaller than most investors even realize. In that environment, Bitcoin doesn't gradually rise in price, it reprices. Because once sovereign competition for a fixed 21 million supply truly begins, the market stops asking, what is Bitcoin worth? And starts asking, how much Bitcoin can we still get? And that, my friend, is how the path to 800,000 to 1.5 million Bitcoin by the year of the next halving in 2028 begins to make sense. Let me know your thoughts on that. And can you see the hyper-Bitcoinization scenario playing out? Or do you think it's more likely we see a conservative case or base case? Holla and let me know. And as a bonus, I found this other prediction. Bitcoin may hit 180,000 this year if this particular situation plays out. So I want to break that down. They're giving it a 25% chance of happening, by the way. We all know the current all-time high, the firmament we achieved in October 2025 is 126. So this is like, another 55,000 on top of that. But this is amber data, assigning a 25% probability to a more optimistic outcome, with Bitcoin climbing between 120, ultimately re-entering price discovery where we left off in October, and then 180,000 as the top. And in the bull case, institutional participation accelerates alongside the sovereign adoption, creating a feedback loop for the expanding flows. So I want to know your thoughts ultimately with some of these bullish price predictions. Can you see it happening? Let me know. Next story of the day, Trump's national cyber strategy pledges to support crypto and blockchain. That's right. Crypto execs are combing through President Trump's national cyber strategy after it was released yesterday, searching for hints about what it could signal for government support for the crypto industry. Quoting Alex Thorne from Galaxy Digital, crypto and blockchain are explicitly named as technologies to be protected and secured. This is a first for any U.S. cybersecurity strategy. Crypto and blockchain were mentioned once in the 6-page report. Quoting it here, we will build secure technologies and supply chains to protect user privacy from design and deployment, including supporting the security of cyber or crypto securities and blockchain technologies. However, industry execs have also been interpreting other parts of the document to see how they relate to crypto. As Mark Chadwick points out, this just happened and is super bullish for crypto. White House released a President Trump new cyber strategy for America. The report directly positions cryptocurrency and blockchain as strategic tech the U.S. must secure and lead globally. Key highlights: crypto now being framed alongside AI, quantum computing, and cyber security as critical infrastructure for the future economy. Bitcoin Bitcoin VC points out that the quantum has been taken seriously. Nick Carter from Castle Ventures, who has been very vocal on the threat of quantum computing to Bitcoin, pointed to the section saying the government will accelerate the modernization, defensibility, and resilience of federal info systems by implementing cybersecurity best practices, post-quantum cryptography, zero trust architecture, and cloud transition. Sure seems like they're taking quantum seriously. Nothing to worry about, I'm sure. Clearly being sarcastic here. And it comes as the industry continues to debate about how close quantum computing is to being a serious threat to Bitcoin. On Feb 15th, Carter said the major Bitcoin holding institutions may eventually lose patience with Bitcoin developers for not addressing quantum computing concerns quickly enough. Trump said the national cybersecurity outlines his priorities for ensuring that America remains unrivaled in cyberspace. Artificial intelligence was a key focus of the report. We will secure the AI tech stack, including our data centers, and promote innovation of AI security, it said. Trump also emphasized the importance of recruiting the next generation of workers in the cyber workforce to design and deploy exquisite cyber tech and solutions. The U.S. typically releases a national cybersecurity strategy every administration, outlining the government's priorities for emerging tech. All right, fam, next story. Pakistan's parliament passes the Virtual Asset Act of 2026. Hit me now. Pakistan's parliament passed the Virtual Asset Act 2026 on Wednesday, cementing the Pakistan Virtual Asset Regulatory Authority, a government agency as the country's digital asset regulator. Regulators. The framework gives this organization, established in July of 2025, the authority to enforce licensing requirements and oversights of a digital asset service providers, according to the announcement from the regulator. Also, they're tasked with setting the enforcing anti-money laundering provisions and international sanctions compliance under the new legislation, quoting it here, with no objection certificates already issued and banking rails being developed in coordination with the State Bank of Pakistan. We're moving towards a comprehensive licensing framework aligned with the global AML and financial integrity standards. I call it the lizard folk standards, but hey, that's just me. The bill passed in both the Senate and the Pakistan National Assembly, but must still be signed by Pakistan's president to become law. The government of Pakistan moved to regulate crypto as legal tender in November of 2024, reversing the long-standing pushback from the regulators, who said crypto would never be legalized or integrated into financial system. Surprise, surprise, mofos. Since that time, Pakistan announced the Bitcoin Strategic Reserve and dedicated 2,000 megawatts of electricity for mining and AI data centers. Digital assets are the foundation of the new financial rail for the global south. The Pakistan views blockchain tech as critical infrastructure because it is. Now here it shows you in this chart, let's see, Pakistan ranks near the top of the Chainalysis 2025 Global Crypto Adoption Index. Number 1 goes to India. Number 2 to the US. 3, Pakistan coming in strong. Vietnam at number 4. Brazil number 5, Nigeria 6, Indonesia 7, Ukraine 8, Philippines 9, and the Russia Federation 10. And UK is number 11. So January, Pakistan signed the Memorandum of the Understanding with the SC Financial Tech, an affiliate of the World Liberty Financial, the decentralized finance platform founded by the Trump fam. The collaboration will explore the use of USD1, which is Trump family stablecoin, for digital payments, including cross-border transactions and remittances. We also have the Binance founder, CZ, who said Pakistan could emerge as a global hub for digital assets by 2030 if the country continues its rapid pace of development and regulatory process. And speaking of the global hash wars, Trump, what are we doing with our strategic Bitcoin reserve? Last I heard, Bitcoin supply of the U.S. is allegedly just north of 300,000. We got to get at least to 1 million stat, or maybe countries like Pakistan, India, and these other upcoming countries will take over, So what are we going to do? Stack some biddies. Come on now. Next story of the day, yo. Markets are under price and risk of longer Middle East war. So will this war last a long time like we saw with Iraq? Some people are like, it'll be over in 2 days. I'm skeptical. Typically with these regime changes, it's a very lengthy process. It's never what they tell us, but let's dive in. This is a smart man, by the way. Crypto billionaire Arthur Hayes just motherfucking blaze. You know, as geopolitical tensions escalate and the global markets face a new wave of uncertainty, one asset has been behaving in an unexpected way. Bitcoin. While the Middle East slides deeper into conflict with the energy markets reacting to the potential supply disruptions, the world's largest crypto has held up relatively well compared to many traditional assets. For some observers, that resilience raises an important question. Could Bitcoin be signaling something about the macroeconomic market that hasn't been fully priced in? Arthur Hayes shares his perspective on the forces shaping the global economy, the forces of evil, Epstein's clients, of course, and why the coming months can prove pivotal for the financial markets. On the geopolitical front, Hayes argues investors may be underestimating the risk if the current conflict expands or drags on, which reminds me of the word dragon, drag on. I don't think global markets are fully priced in, he says, in a longer war because the U.S. and Iran, he said. If energy flows are disrupted, the ripple effects could spread through the global economy via the higher oil prices. And we already got higher oil prices, yo. I heard rumors in California, $10 a gallon. Insane. Inflationary pressure, increased volatility across the markets. At the same time, Hayes says another powerful disruption is unfolding beneath the surface. And FYI, one of my favorite hip-hop albums growing up was The Jizza Genius, Beneath the Surface. I even went to the concert to meet the Jizza. True story, Tampa, Florida. But anyways, artificial intelligence. According to him, AI could rapidly reshape the labor market by replacing a significant share of knowledge workers, from lawyers and bankers to accountants and analysts. If the transition happens quickly, the result could be widespread credit stress as households struggle to service existing debt. Ultimately, Hayes believes the global financial system tends to respond to crisis the same way, with liquidity. Bitcoin is essentially just a liquidity smoke alarm. I'm going to rephrase it. Liquidity smoke bomb for the ninjas out there. Satoshis. To hear Hayes break down the macro thesis, check the show notes in the description. Bitcoin could outshine the gold through to 2029. According to the macro economists, prediction. That's right. There's apparently a gap between how the investors feel about gold and Bitcoin, and has rarely been this wide. Gold's fear and greed index sitting at a 72 out of 100, deep in the greed territory, while Bitcoin's hit an 18 out of 100, a level classified as extreme fear. In fact, we were as low as a 5 more recently, which is the bottom currently for the cycle. So we got macroeconomist Lynn Alden, the one and only, says the gap tells a story and we should pay attention. Let's do it. Alden, speaking to the New Era pod this week, said if she had to choose between the two assets, she'd pick Bitcoin. She says, gun to my head, if I had to say which one I think outperforms, I'll say the Bitcoin. Well, smart choice, Lynn. Gold has climbed hard. Bitcoin has fallen, like the fallen angels. She sees a pendulum between the two, and right now it has swung well in gold's favor. That, she agreed, sets up the potential reversal. That's right, we're driving in reverse. Watch out. Gold reached the record high of almost $5,700 an ounce in January, had a slight correction. I think it's currently trading at around $5,100 an ounce. Bitcoin, by contrast, sitting at roughly 44%, below its own peak of 126,000, which was reached back in October. That's right, we got literally a 60% correction. We touched 59.9, which is the current bottom for the cycle, which is lower than the 2021 all-time high, which was 69 Gs, which is mind-boggling. But the divergence in price performance mirrors the divergence of the man in the mirror from Michael Jackson's solo performance. All right, I'm making that shit up. But Alden acknowledged gold's run, but stopped short of calling it a bubble. Sentiment around it is somewhat euphoric, as she said, while the mood around the biddy has turned from what she described as unfairly negative, because we got the motherfucking fudsters and the fraudsters all working against in a conspiracy to keep the price suppressed. Jane Street, great example, 10 a.m. Look her up, $40 billion lawsuit. She was careful not to overclaim both assets can rise at the same time. Both can fall. She does not treat the relationship between them as fixed or predictable with certainty, but pressed to make a call. She made one. Put the gun to my head. I'm picking the BTC. Let me know if you agree. The backdrop of Alden's comments is the broader debate about which asset deserves the title of a reliable store of value. Billionaire investor Ray Dalio started fudding Bitcoin more recently, which is interesting. He says he's on the gold side. Speaking publicly, Dalio described gold as the most established form of money and pointed it to standing as the second largest reserve asset held by the central banks worldwide. He raised concerns about the Bitcoin limitation and privacy and the vulnerability of the quantum computing. So he's one of the ones pushing the quantum computing FUD, a technological threat which remains years and some say decades away, drawing increasing attention as construction begins on the large scale quantum facilities. If it's truly that much of a fucking concern, buy yourself a quantum resistant wallet. If they're not available yet, I'm sure they'll be mass available and being produced within the next couple of years. Simply transfer your current Bitcoin from whatever wallet you're currently using to the quantum resistant wallet. Problem fucking solved. It's really not a big deal. But they make a big deal about it because they're fudding it. Brian Armstrong says, I think Bitcoin can reach 1 million by 2030 based on the current conditions and progress. Think long term. And in my humble opinion, long term in Bitcoin is a decade. But hey, 4 years in crypto, I guess we can call that long term as well. Dalio's position and Alden's are not entirely at odds. Neither dismiss either asset outright. The question is about which performs better over a defined window. And I mean, Bitcoin has outperformed gold every single fucking year up until recently. So I do not see gold outperforming Bitcoin in the future. I think Bitcoin is drastically undervalued. But the Coinbase CEO says he predicted Bitcoin to reach 1 million by 2030, citing cleaner regulatory conditions emerging in the U.S., which he called the signal for the rest of the G20. But again, gold supply is going to increase 1% to 2% every fucking year without fail because they just discover more gold. Gold is, there's an abundance of it in the fucking earth. Granted, there's relative scarcity. There's still an abundance of it in the earth. Just like oil, the earth produces it, you know? So Bitcoin, hard cap, finite limited supply, perfect money. For the first time, perfect money exists and they can't artificially inflate it, but they can try, which is what they do with futures and leverage plays and things of that nature, ETFs, which are IOUs. And I heard something like with gold, for whatever the gold supply that truly exists, and it's probably not even in our Fort Knox reserve, but they sell more than 100x paper gold, being traded on the market. It's probably even astronomically higher than that, than what there actually is. And so right now, I think the grand total gold market cap's like 40 trillion, but the actual underlying asset is a fraction of that. You know what I mean? If you don't know, you never know. Now for our final story of the day, Strategies STRC stock trading surge. How much Bitcoin could a woodchuck chuck if a woodchuck could chuck wood and the woodchuck was Michael Saylor? How much would he buy? That's the question at hand right now. Let's break her down. Saylor's strategy currently owns 50 billion of Bitcoin, the highest by any publicly traded company on record by a stretch. Ironic enough, Stretch is Strategy's income-focused preferred stock. Launched July of 2025 to raise capital for the Bitcoin accumulation strategy. In its IPO, the company raised $2.5 billion gross and $2.47 billion net. It then used those proceeds to acquire 21,021 Bitcoin at an average price of 117 G's. Baby. Strategy later expanded the model by launching a 4.2 billion STRC at the market program. That was July 31st, 2025. Allowing it to sell preferred shares gradually into the market demand rather than all at once. The mechanism works best when Stretch trades near its $100 target. For that, Strategy pays a variable monthly yield to the investors, which I believe is 11.5%, adjusting it to keep the stock close to the par value. A higher yield can support the price when it falls below par, while a lower yield can cool the demand when it rises far above. For March of 2026, the annualized Stretch rate is 11.5%, or about 0.95, so that's just shy of 96 cents per share monthly. Let me know if any of you got exposure to Stretch to earn, your dividends and yield. In short, STRC turns investor demand for yield into funding for more Bitcoin purchases. For example, in January, Strategy sold 1.19 million Stretch shares for 119 million in net proceeds, along 1.12 billion raised through the MSTR sales. It used a combined capital to purchase 13,627 BTC for roughly $1.25 billion. He is the Bitcoin alchemist, after all. In February, Stretch proceeds are worth $78 million, were used to purchase 2,486 BTC at net. Strategy may soon raise over $300 million through the sales of STR preferred stock, potentially giving Saylor enough firepower to buy another 4,300 Bitcoin. Aiming to estimates from Bitcoin Quant, the projection is based on Stretch's trading activity this week. Bitcoin Quant's model shows about 777 million jackpot, baby, in total volume, with roughly 97% or 755 million traded above the stock's $100 par value. Using a 40% capture rate, the model estimates around 302 million worth of net proceeds, enough to purchase another 4,300 Bitcoin based on the average Bitcoin price of 68 to 73,000 during the market hours. Friday alone saw a record 188 million in Stretch trading volume, implying enough capital proceeds to fund the purchase of around another 1,100 Bitcoin based on the same model. The figures remain speculative for now. However, Strategy's latest filing showed another 7 million in Stretch sales contributing to the broader 3,000 Bitcoin purchase. And there we go, yo. How much Bitcoin will the Saylor buy? As much as fucking possible. There's no limit to the sky. You know what I mean? And his goal, obviously, is to have the largest Bitcoin bank in the world. It all started with a few 100,000 bitties, and now he has, I don't know, roughly 5% of the supply. He has the largest amount out of any corporate holder. I think the only institution which on paper may have more than Saylor, is BlackRock's Bitcoin ETF IBIT. However, also note, interesting fact, that Coinbase Prime is the custodian for fucking BlackRock's Bitcoin ETF and Michael Saylor. So, not your keys, not your coins. Who really holds the keys to all this Bitcoin? Coinbase, which, in my opinion, the U.S. government has total control over. You know, they're doing business with the government, of course. You can't short your dorks. Don't be retarded.